While mortgages for borrowers who have been through a major financial setback will reach an estimated $5 billion this year, higher than in years past. For context, it's still a small part of the more than $1 trillion that will be given out in mortgages. Miller Samuel, President and CEO Jonathan Miller with me now. So, Jonathan, great to see you.
Great to see you.
When you see more money coming from banks and going to perceived risky borrowers, does this remind you of 2006 and 2007, which obviously led to the blow up in 2008?
Maybe just a little bit, but I really think what it is that the traditional commercial lender is still essentially under siege from the legacy of bad lending decisions back during the bubble. And the demand is there, so alternative routes for these customers are appearing.
Because who's lending to these people? Because every single, blog post, article that I read is, remember Ben Bernanke couldn't even get a mortgage because his government salary was so low, there was no bank that would lend to him.
But that's exactly why this phenomenon is beginning to appear, because commercial lenders are afraid of their own shadows still. They're under siege from the Department of Justice. They're grappling with loan buybacks from the former GSEs like Fannie or Freddie, and the tight spread of low mortgage rates. So this is an opportunity for startups. We're seeing this in new development across the country, all the urban markets where we have all these tall towers. Most of that's being financed not through commercial, the big national retail banks, but by alternative sources like
peer-to-peer lenders,
peer-to-peer, but I think more along the lines of Wall Street, hedge funds, sovereign wealth funds, private equity groups, anything other than the traditional highly regulated commercial bank.
Okay, so everyone else is stepping in to where banks stepped back from. That's the conclusion.
That's exactly it, filling the void, which is, the story now. We have an improving economy, a little bit of uptick in demand. People want to take out loans.
All right, Jonathan, I want to have you back to talk about high, fancy buildings that you just referred to there, because I know that's part of your market. In the meantime, Jonathan Miller joining me there, Miller Samuel, CEO. We are back.